It's okay. We'll be just recording the.
America, and now the universe's largest injury law firm.
In equally important groups, the police who investigate crime and the district attorneys who prosecute the offenders. These are their stories.
Somebody's watching SVU.
That's me. Let me mute my phone.
Okay.
My
What's
bad.
going on?
Man, I'm doing good. How about you?
Doing well, man. Give people one or two more minutes and we're gonna get rolling. Yeah, we'll give people 1 or 2 more minutes, then we'll get rolling and start talking about raising capital. I love talking about of course real estate investing, but I think second best is just raising money and just that process and being able to get a deal across the table and raising money, and then at the same time helping other people, get a return on their money. And that's the biggest part of all of this is being able to help individuals that may not have the expertise to grow their money or the knowledge base to diversify their portfolios outside of just the stock market or mutual funds into cash flow and real estate. And then especially on the ownership side, there's one piece to invest in the syndications and invest passively, but there's a whole nother side of it, for the ownership and the benefits of, the tax, long-term appreciation and all those things you get to participate in as a owner. All right, Faye, we're gonna get ready to get going. I'm gonna hand over host responsibilities to you, so I don't have to worry about managing that while I'm pushing the slides.
All right, let's go.
Sweet. No, you got to give me permission to share my slides now.
Hold on, just go and say. Okay. Should be good to go.
All righty, cool. So we're going to go on tonight. We're going to talk about the truth about getting started in real estate with little to no money. A lot of people, as I've gone over the last year, and even with my own personal journey, that money was always, I'll say, a limiting belief for not having enough money to get going, because you always want more. More is always better. But I think there's a lot of misconceptions out there when it comes to money and just how much you need in order to get started in real estate investing. So I've been in real estate now for over 15 years. And one thing that I can tell you, number one, is not about knowing everything. It took me years and years and years to figure this out, that you only can learn so much, but at some point you hit that threshold where you need to start taking action. And so you can dive in and you can just try to learn everything, but you're never going to learn everything. At some point, you got to start taking action. You got to start gaining experience in order to start building your portfolio and eventually building long-term wealth. And that's the thing, to get there, you can't work your way to wealth. There's no way that you're going to be able to go through a 9-to-5 that's going to get you to the end point where, one day you're going to wake up wealthy, where you don't have to go to work. You don't have to trade time for money, unless you become an investor. That is the only way that you can, or you get the lottery, but the odds are that they're not in your favor, that you're going to be able to hit it for 500 million or $1 billion. But I think taking action, getting past that fear, getting past those limiting beliefs, getting past those those misconceptions wrapped around money that, ingrained in us from our experiences through childhood, our upbringing, just our relationship with our job and money and debt and everything that we hear about. Hey, you got to get out of debt. Credit cards are evil. Credit is evil and debt is bad. But getting past all of those misconceptions that we have in order to understand, okay, how do we get to the point where we can start, one, being a better steward of our money, but then growing in experience and in the confidence in ourselves where we can start actually taking other people's money and invest it and provide them a return. Saving versus investing, just waiting, putting money into CDs, where you're getting, I think now you can get 3 or 4% in a CD right now for your return. But we all know that's still less than inflation, where inflation is right now. So you're still losing. Not knowing where your money is. A lot of people don't, the money comes in, it goes out, and unfortunately for a lot of people, they have way more month than they do money. Whereas that they're having to tap into savings or they have to tap into credit in order to get through all their expenses and everything that they're paying for on a monthly basis. And I think the other, uncommon mistakes that a lot of people make, they try to do this alone. And I think being a real estate investor, and I'll say for me, just the whole process of going through and the relationship with money, that money was just something you don't talk about. You don't ask people how much money they make on the job. You don't ask a lot of people, they don't want you to ask what they're investing in or what stocks they're picking. And, so it's one of those kind of like taboo things where it's like, it's kind of goes unsaid that a lot of people, they kind of just shy away from discussing money. And so a lot of times they go in and try to do it by themselves because one, nobody in their circle is talking about it and, forthcoming enough where they feel like, hey, they're successful doing it. Maybe I can ask them to help me. And so a lot of people just kind of go through, they may have a conversation at work. Hey, what are you investing in? What stocks are you looking at right now? And that most of the time, that's probably not even the best advice that you need to be following anyway. So I think that's one of the, uncommon mistakes that trying to go through and do all this process alone. For those who don't know me, that's hadn't been part of REI Genius. I had a few people reach out to me, but coming to you by way of Alabama, lower Alabama, the other LA, not on the West Coast, but, grew up in Alabama, graduated University of Alabama, Roll Tide. I commissioned as an officer in the United States Air Force, been doing that now over 17 and a half years. Currently a lieutenant colonel in the Air Force, married to my beautiful wife, Melissa. We got 3 kids, Johnny, Mackenzie, and Jace. And that's why when all the real estate stuff that I do and, everything that I talk about is for them. For me, it's building that legacy. That's something that was instilled in me at a young age by my parents. And that's my number one goal behind everything is one, helping build my legacy. But then right after that is, something that we talk about in the service before self is helping other people to achieve their dreams. And I'm a huge believer that the more you can pour into people, the better off that they'll be, and then the better off that you'll be. Because I'll tell you that it's nothing more satisfying than being able to talk to somebody and saying, hey, yep, I wouldn't be where I am because of you. You helped change my whole mindset, my whole legacy, my whole approach to how I do everything that I'm doing now for my family and my future generations. And so I think that's the biggest piece that when I'm done and I kind of hang it all up at the end of the day, that I want to touch as many people as possible to say, hey, yeah, my life wouldn't have been the same if I hadn't met Johnny Lynum. And so that's kind of my goal with all this, with REI Genius and with the community and with what I'm sharing with you all tonight. Why is it important for you to know about how to raise money and to raise money the right way? I think everybody's situation is going to be different. Everybody's investing goal is going to be different. For those that I coach, they already know that it's going to be an individual thing, case by case basis. Everybody's strategy, their approach is going to be different. Some people may want to build $1 billion portfolio. Some may want to have just a portfolio of 5 homes. Both of those are totally okay. But the big thing that you need to know is, okay, what does it take to achieve that goal? And understanding who you are, where you are, and what do you need to know how to do? Because for some people, they may not need to know how to raise money. But I'll tell you, like with me, I from where I came from, my parents didn't have a whole lot of money. they didn't have a silver spoon. I didn't grow up with a silver spoon, whereas that, hey, you're going to have, we got $300,000-$400,000 set aside for you to go start a business or, start investing or whatever it may be. That I didn't have that. So eventually most people, when you talk about real estate investing, you're going to run out of your own capital, your own money. And for some people, they don't get comfortable with being able to manage other people's money. I know it was the most humbling feeling for somebody to, wire me $40,000. My first, family member that came in was like, hey, yep, we want to invest with you. You're down south with some great deals. We see what you're doing. I was like, wow. I'm like, okay, cool. But it's a whole nother level. It's one thing investing your savings and the money you have, but it's a whole other thing when somebody else gives you their hard-earned money and just the responsibility that comes with that. And so that's one of the things that you guys got to realize. Why is this important to you for this? Because you can do a whole lot with being able to grow a business, to grow your portfolio by being able to leverage other people's money. And when we say other people's money, that includes banks, because guess what? That's other people's money, because guess what? All these individuals, that are have CDs, that have savings accounts, all these different accounts at the bank is lending you their money that they put on deposit. They're just charging you a whole lot more interest rate than what they're paying them when they deposit their money in the bank. So that's the thing that we realize in the value with what we do as real estate investors, is that we can give them a whole lot more, a better return with a small, I won't say small, but with a lower risk profile than a lot of the alternatives out there, especially when you start looking at the stock market and the lack of control that you have over a company, over a mutual fund, for the insight that you have. Whereas that now you can invest in tangible property. You can do your underwriting, you can understand the market, you can understand where rents are, you can understand the value add proposition of going in and improving the property in order to bring in additional cash flow. And then you can quantify the benefits on the tax side, future appreciation, the monthly cash flow, and the debt pay down that the resident's paying. So all those benefits that you have by having that loan. And so that's why I think it's really important to just being able to have that conversation and let people know what the benefits are. So we're going to talk a little bit. We're going to go in tonight, just the framework at a high level, and share with you all what it is that you need to do as a real estate investor to position yourself best in order to be able to raise money, to raise capital for deals. And that's what it's all about. I'm gonna get you guys to come off mute. I got a special kind of one-on-one session that I'm gonna give to whoever can come up with the closest number to the total investor contributions right here. So this is just a screenshot from my software that we use, Groundbreaker, to manage all of our deposits. So I'm gonna give you guys, you can come off chat, you can drop it in chat, whoever can get the closest that we're gonna have that. I'm gonna do that giveaway, a one-on-one coaching session for 30 minutes to whoever gets closest to that amount, total investor contributions right now. So y'all drop your guess in chat, or you can come off mute. Anybody want to take a stab? $3.51. Pam said 1. Okay. I'll give y'all a little time we're gonna come back and revisit it at the end. But I want you guys to kind of think through that piece, and we're gonna talk about it going through that. We have the I'll show you this screenshot of the software and all that, and we'll talk about the number and how I got there and everything. But at the end of the day, it all started with an Excel spreadsheet. It started with an Excel spreadsheet, started with a promissory note, and and just manage it from there. That's the process, the journey that you just have to get started. And I think a lot of times we think that we have to do a whole lot when we don't up front. And that's one of the first things that I want to tell you guys, is that you don't have to have all this done, this grandiose systems and automated emails and all this, having your newsletter ready to go. Those are things that you can grow into. But starting out, hey, If you got one investor, you know, hey, you can call them every week, get on the phone, you can send them a text message with some pictures or whatever it is that you want to do just to keep them updated. So let's get started. So money versus capital. Money without financial intelligence is money soon gone. You know, a lot of times we have a lot of cliches that we can follow. Money doesn't grow on trees. You know, a penny saved is a penny earned. And I love this quote from the Bible: a fool with his money will soon depart ways. And so I think just going through and understanding that money, just everything that we were told about money, you know, a lot of people, even if you look at Hollywood, like if you see who all the evil businessmen, you know, most of the evil people, they're always businessmen. It's like, why people in business have to be evil? You know, they always have that stigma, that cliche that the businessman is out to get you. You know, the investor is always out to get you. You know, they're walking with the $3,000 suits on. And so from the get-go, it's just in society in general, like you get that negative connotation when you start talking about an investor or a businessman, that they think that, hey, you're out to get them. And I think the relationship with money and just in general that, you know, that people have a negative connotation when it comes to money, or especially when you start talking about having a lot of money, that why you got, you know, you just think about it, filthy rich. It's like, why is it got to be considered, we got to be filthy rich? You know, why is that analogy, you know, kind of tied with that? But when you think about it, that a lot of times that, you know, people, at least and I can speak for myself where I come from, that you don't talk about money. And then, you know, a lot of times if you have a whole lot of money, that, you know, people think that you had to do something bad, or you did something, or you're oppressing people in order to achieve and get a lot of money. And so we know that that's nothing more than, you know, that could be farther from the truth when we start looking at the relationship with money. And so one of the limiting beliefs that I had is like, you got to trade your time for money. And you know, for me, it was like, okay, I have to realize that you'll never be rich. My dad always told me, hey, you'll never be, he was an entrepreneur. And he was an entrepreneur, went at a high level entrepreneur. We were, I would say, lower middle class. And he said, hey, in order to be, if you want to be wealthy, you want to be rich, you're not gonna be able to achieve that by working for somebody else, end of the day. And so for me, I had to figure out that, hey, I can't trade my time for money. That you got to figure out how to make money in your sleep, or you're going to always continue to have to work for money. And the way to make money in your sleep is through investing. And so understanding that you got to take this money and make this money work harder than you work. And the more you can do that, when you start doing that at a younger age, and eventually your money is going to be working harder than you, and you can start scaling back. Hey, you don't have to work as hard. You don't have to work overtime. You don't have to work a second job. You can quit your job and go work for something else that's less stressful, that pays less, because now your money you're getting a return on investment. You're getting compound interest. Your money is now working way harder than you have to do physically. And so that's one of the biggest mindset pieces that come with the relationship with money and capital, is understanding that you got to figure out how to make this money work. And as real estate investors, we have that opportunity in order to grow our money, but then also bring other people along for the journey to help them grow their money and show them the way to grow their money. Whereas that now you're teaching them how to fish versus just feeding them and them depending on you in order to be successful. So why raise money? Everybody's going to have a different reason. They're going to have a different why. They're going to have a different goal on the level of money. But you need to understand this at the beginning on why do you want to raise money for your business? Is it to grow, to scale to a certain extent? Understanding, hey, how is this directly tied to my future goal or where I see myself in business? Do you have a certain amount of doors that you want to achieve? A certain amount of investment properties, or a certain amount of money that you want to have under management? You need to think through, because in being able to translate your vision and cast the vision to those potential investors is going to be super critical in order for them to want to invest in your project, to want to invest in you, and to do the deal. Because a lot of times it comes down to relationships, that when you're looking at investing, that people, they understand the deal, they look at the deal, but a lot of times they say it's the jockey, not the horse. That the people are more concerned about the individual that's leading the project more so than the project. Because hey, you need to make sure, is this person, do they have the experience? Can they deliver? Have they delivered before? Do they have integrity? Are they a man or a woman of their word? So those things that go directly into why somebody would say, hey, yep, I trust this person with my hard-earned money, that I'm going to invest $100,000 in their business. And so the better that you are at conveying your why, the reason why you're doing what you're doing, the easier it's going to be for you to be able to raise money in order to execute that vision that you have. But I think everybody needs to just do that soul searching on why they need to raise money or why they need more money. Because going through the process of just raising money to be raising money, or to ask people, like, you got to have a concrete reason, and you got to have an end game in order to provide those returns and to be successful as an investor on the back end. Asking versus taking. This was the big one. This was the big one with being able to understand that I wasn't begging somebody for money or begging someone to come into a deal. That, no kidding, that I had an opportunity. I had an investment opportunity where they're able to make 10% return on their money compared to, the stock market, where they may only make 3-4% this year, and give them an alternative where they can diversify and not have all their money tied up in the stock market. So understanding from day one that this is an opportunity, and it's not you actually begging for, money, or, you're feeling uncomfortable. Because I'll tell you, a lot of people who aren't savvy investors, they may take it that way. And that's okay, because a lot of people, they're like, oh, well, I'm not going to trust you with my money. Or what do you mean you want $20,000? And it's a different mindset. And so that's one of the other things too, when you start looking at, and we talk about the process to get there and the network, to be able to raise the capital, you got to understand on who your avatar is. Who do you want to start raising capital from? A lot of people, the easiest is to start with family and friends, but a lot of times family and friends, they may have the money, but they may not have the vision. They may not have the knowledge, which is going to make them not have the insight to feel comfortable, whereas that to invest in a deal. And that's okay. That, because a lot of people, they may not have that information. And so it makes that much harder to trust somebody else with their money, especially when you think about it. Like we all work, people that work, that you work hard for your money, and you actually giving up a portion of your life to earn this money. So when somebody's handing over money, that is literally, they are giving a part of their life away, because they traded their time in order to earn that capital. And so a lot of people, it becomes, if they don't have the expertise and the knowledge to invest it, they kind of hoard it. They don't want to lose it. They just stick it in the bank and save it. You hear people talking about, through fear, they'll put money in the coffee can, under the mattress, and just store it wherever, because they don't know how to grow it. They don't understand how to grow it. And so that's one of the things that, as you're going through, that there's a constant education process that goes along with raising money, because a lot of people, they're going to look to you as the expert in helping them get there, because they don't necessarily have all the education or all the knowledge about investing starting off. And that's okay. And I think that's one of the biggest ways to get there, to have someone that to earn their trust, that whether they like you, they feel comfortable investing with you, is the education piece. Being upfront, showing them, hey, this is a good deal, this is a bad deal, and showing them how they can actually go through, how they can underwrite a deal and analyze it to make a informed decision on what works best for them. And I think that's one of the pieces that we can't lose sight, because at the end of the day, as a passive investor that's giving you money, they're trusting you. So say you're on the East Coast and you need to fly to California, and are you gonna go get plane lessons so you can fly a plane by yourself to go, if you got to be there in a couple of days and you never flew a plane before, you don't have a pilot's license? No. You're gonna go get on the airline, you're gonna get on the plane, they're gonna have a pilot that's trained, that has a license, been there, done that, they have the experience. You're gonna get on the plane, you're gonna take off, you're gonna sit there, you're gonna kind of get into your groove and just go on with your life. You're gonna go get on your computer, You're going to watch a movie. You're going to get up, go to the bathroom if you want to. You're going to chat. You're going to text. You're going to go on with your life while they're flying the plane to get you to the West Coast. And then you're going to land safely. You're going to get your bags, and then you're going to keep going. The same thing is when you start talking about real estate deals. With the real estate deal, that real estate deal is simply the airplane. And you, as the real estate investor, you're the pilot. And guess what? It may be a couple of you guys. You may have a co-pilot. If you're flying overseas, you may have 2 or 3 pilots on the plane that switch out. So it may be 2 or 3 people on the team that's leading that real estate deal. And the passive investors, those that's loaning money and giving them money for the deals, they're the passengers on the plane. And guess what? While we're executing as operators and executing the deal, we're working through doing the renovations, the updates, we're collecting the rents, we're executing the business plan. Guess what? They're still going on with their life. They're not having to worry about flying the plane. They're not worried about talking to tenants or residents. They're working their job. They're on their laptops. They're doing what they need to do, continue to earn income. They're hanging out with their family. They're traveling, doing whatever, because they're trusting you as the operator to fly the plane, to get them to their destination at retirement, whether it's 2 years, 10 years, to help get them safely to their destination at the end, or where they set out to go when they signed up for that deal. And so as long as you take that mindset and that approach, the better off that you're going to be as an investor, understanding that, hey, you're providing a service and your goal is to get them to the end of the finish line as you laid out up front for your deal. So where do you start? So everybody needs to kind of have a hierarchy or framework of where to start. I recommend you start with banks. Number one, banks are always, I would say, easiest. They can underwrite for most people. If you have a job, you have documented W-2 income, then you should be bankable. You have a decent credit score. Then being able to secure a loan for a property is pretty good. For first-time home buyers, you got FHA. VA, if you're a veteran, you got the VA loan. You got conventional, where you can only put 5% down to get into a personal residence. So a lot of times there's different strategies for like house hacking, or you can do like a live-in rental where you can rent rooms out, or you can eventually, move out after living there for a year and rent it out completely. And so there's different strategies where you can leverage the bank's money without putting a lot of money down personally in order to get in potential deals. And with those, some of them you have to live in for a year, and then you can transition 100% to a rental property. But after banks, you kind of have hard money. Hard money is essentially loans that are tied directly to the property. They're looking at the asset itself, the property itself, in order to qualify you for the loan. With that, they're going to underwrite you. Hey, do you have the experience with doing a renovation project for a house? Have you done this before? Have you done this class of houses? Is it a luxury house, or is it a first-time home buyer, first-time homeowner in that area primarily that's going to be looking to buy? And so understanding that, hard money lenders will give you, anywhere from 80%, 90%, or 100% of the loan price, of the purchase price, in order to buy that property. And so when you start talking about other people's money and raising money and doing deals, that hard money is one of the best ways to get started with little money up front out of pocket. My first deal that we ever done was a hard money lender. It was a private investor who had a hard money company here in the DC area, and he charged a flat 10% rate. We had to put 10% down, but outside of that, we got all the other. We got the purchase price, plus about half of the renovation budget that we needed to renovate the property. And so it worked out, whereas that we didn't have to come up with like $250,000 out of pocket from day one to close on the deal. And so that's one of the opportunities with having private money and having other people's money that you can leverage in order to get into one deal, and save as you build up your reserves, you can get into multiple deals simultaneously. And then the next one after hard money is individuals, actual individuals. So when you look at a lot of the hard money lenders, that they're essentially a fund. They go out to private individuals that are, accredited, usually, that they may be sophisticated investors where they're not completely accredited, but they're knowledgeable, and they just raise money into a fund. They may raise $10 million, and then they just put hard money lender LLC, and then they just start lending out these people the money that they have. And one of the great great lenders that I use right now for our projects that they're hard money. They have a fund behind them where I don't have my phone with me, but I think they have raised a little bit over 10 million. I actually got a email today. They've raised over 10 million and they've paid, I think, a little bit over like 1.2 million in interest payments over like the last 18 months. But they essentially, they raise money and they pay 8% return monthly. They pay an 8% return over the course of a year, and they make monthly payments. So that 8%. So if you invest 100,000, you get 8% return, and they spread it out over 12 months, and you get a monthly payment. And then if you go over $100,000, I think it goes up to 9% return. And then if you do anything over 250K, it goes up to like 9.5% return on your money. So they have like a different tier structure. But with that, they just raise money for private individuals, and then they loan it out as a hard money lender and just kind of vet operators or real estate investors in order to give their money out to them. And so essentially, you can cut out the middleman with the hard money lender once you start expanding your network, looking for individuals that, hey, are accredited. You know, we're going to talk about that, about the next kind of going into how do you get started? Where do you find these individuals? Because you can build those relationships, and relationships are really important to have. Banks, your local credit union, number one, that can fund your deals, especially, you know, if they may not be able to fund on the front end, you may have to use a hard money lender to do a deal that has a lot of is dilapidated, has a lot of damage, needs repairs. But then you can go to the local credit union to refinance it after you've done the work and pay off your hard money loan. Or, you know, as you build when you build your network up, you can go and get direct to individuals, and you don't have to go to a hard money lender. Whereas that you can find one high net worth individual that say, hey, I'm gonna give you a line of credit for 500,000. Just let me know whenever you get a deal, I'll fund it, and just give me a 8% return, 7% return, and go from there. And that's where you can get over time to get to that point. But where's the money at? So I think that's the first, once you start talking with individuals, understanding that people can have the money. They may say, hey, I want to invest, but it's in my retirement account. It's like, well, there's some things you have to do before you can get into your retirement account. So understanding where the money is at when you start talking to individual is going to be critical, because you need to understand, hey, is it in a CD at the bank? Is it in your savings account? Is it in a retirement account at your current employer? Is it in an old 401k that you had from your previous employer? Or is it in a self-directed IRA already, you know, where you're ready to go? Because there's going to take time to move money from retirement accounts into a self-directed IRA, and then to be able to fund a deal. So you just need to know when you have those conversations, like, okay, you got X amount, like, well, where's the money located at? And then from there, it's like, okay, let's have a conversation. What are your long-term goals? What are you looking to do for your portfolio? If you have 200,000 here, okay, how much you looking to allocate to real estate? If I was able to get you, and this is worth just the time of tonight itself is, you know, when you have a conversation with an investor, that you let them tell you what kind of return they're looking. You don't necessarily dictate and tell them like, hey, if I can give you a 10% return, because they may just be looking for a 5% return. So you ask them like, hey, if I were able to bring a real estate deal to you that look really good, what type of return would you be looking to get on your money? Like, well, man, I'm getting, right now the stock market's going down. You know, I'm only getting like 1.5% of the CDs. Like, man, can you give me 5%? It's like, okay, yeah. And so I think that's the big thing, is to ask, you know, don't go in assuming, but ask them what return they would feel comfortable with and what they're looking for, and then go from there. So I think that's the big piece. But understanding where they have their money at, whether it's in a brokerage account where they're buying stocks, and just better understanding how accessible the money is going to allow you to kind of go through and say, okay, is this money maybe 2 or 3 weeks tied up, and I got to close in 7 days. We're like, okay, well, I need to go to somebody else that's on my investor list because they're a non-starter, because we can't get the money out there 401k fast enough. So understanding where is the money, structuring the deals. Most people starting off, a promissory note is going to be the number one go-to vehicle for you for documenting and having the agreement laid out. And that kind of looks like it go in different ways. You need to lay out the terms for those, and that's something that I give my coaching clients, that I give them my promissory notes and the terms where you can fill it out. You know, you can go to an attorney to get that drawn out for your state to just make sure that your state that is good to go. But you lay out the terms. Everything is in writing. You know, it's not nothing that's left up to like a handshake and verbal commitment. But no kidding, you have the promissory note that has your LLC, their name or their LLC or their retirement account, the amount, you know, the terms for is the interest rate that's going to be paid, when it's going to be paid, how it's going to be paid. And then also just everything else for is, hey, if it goes into default, what happened? What does it look like? Is it recorded? Depending on the asset, if I have a private lender that brings all the money to purchase the property, we'll record the promissory note. But in like certain situations, if we have just the renovation capital coming in for the deal, we won't record the promissory note behind them because we have the first position mortgage. And so it just depends like that. And that's a conversation that you have. Most of my notes, we go out to 6 months usually up front. And then from there, we extend out if we need to, just waiting on a property to close or for it to sell or refinance, just wherever the situation may be. But understanding and having that flexibility is key in order to just to make sure that they're clear on everything, and then you're also clear, and it's all written down. It's both signed by both parties. And everything's above board and clear from day one on just the terms of the relationship, how everything's structured, and then how everything is going to go once the deal closes, and how they're going to be repaid. And then also I like to, you know, to have that conversation that, hey, this note, this money that you lent is backed by the property. We have an insurance policy on the property in case it burns down. We're going to be made whole. If anything happens from there, you know, it's insured. And then also we have a title policy that they ensure that the title is clear, that it can't be clouded, that there's not like any additional liens or encumbrances that are on the title from day one. And then also, you know, from all those things, they're covered from a risk perspective. They're knowing that, hey, this asset is good to go and it's back. And then if worst case something happens, then they would just simply have to file their interest with the courthouse, and then they can foreclose, you know. And if they may be in a second position behind the first mortgage, if they're not, but if they lent all the money to the acquisition, then they would be in the first position to foreclose on a property if they had to. And so those are the things to just have that explanation and just sharing with them to understand how they're protected by investing in real estate and investing in your deals. And so that's one of the ways to structure. And then it gets a little bit more complicated when you start talking about syndications and, you know, having an operating agreement, because essentially you're selling shares of your LLC, the ownership for the property. And, you know, you have to go through, you lay out your private placement memorandum for investor that just highlights everything about the deal, the economy, the market, the risk with the investment. All of that is laid out there because you have to be within compliance with SEC, with the Securities Exchange Commission. So when you start selling because essentially a syndication, you're just like a company on Wall Street, you're just not public. And so you find different exemptions within the SEC's rules that allow you to not report like normal large public companies have to report. So you find those exemptions. 506B is one you hear that allows both accredited and non-accredited investors to invest. Then 506C, where it's only for accredited investors to invest in those type of deals. So yeah, it gets a little bit more complicated, but for most people, they're going to be starting off with just a promissory note to just document those terms and the overall deal structure. Get your message out. So one of my mentors, he kind of equated it to you have to shed your secret identity. You know, you got to go jump in the phone booth and you come out. Hey, I'm real estate investor. You know, you got to put that cape on. And so, because a lot of people, you know, they don't know that you're a real estate investor. And guess what? If they don't know that you're a real estate investor, they don't know that you can help them grow their portfolio. And so the more that you're able to get your message out and let people know what it is that you're doing, the better off you'll be. And, you know, it took a long time for me to get comfortable sharing our projects online and just being out front, just because I grew up in a household like, okay, the left hand, the left hand doesn't let the right hand know what's going on, what it's doing, or what's the other saying? Don't let the dishwasher know. Don't let the dishwasher know what you've done with the dishes. All that kind of stuff. Those cliches that people say that it's kind of say, just kind of being private and secluded, which is a place for that. But if you're looking to grow your business and you want people to know and invest with you, you're gonna have to put yourself out there. You're gonna have to share information so they can continue to know you. They can learn about what your deals that you're doing and how you're benefiting, how you're growing other people's money, in order for them to feel comfortable where saying, picking up the phone like, okay, yep, I'll put $100,000 in your deal, and you eventually get to that point. I've had people that invest in my deals that I never met, like so-and-so told me that, hey, you're doing real estate. I saw you on social media. Like, hey, I want to invest 70,000 in your deal coming up. I'm like, what? 70,000? Like, we hadn't even met. And and this guy's sending me $70,000 out as IRA for a deal. I'm like, okay. And even on like my last apartment deal, I ended up raising a portion of money on there, and well over $200,000 came from one investor that I never met before in my life. But I had a relationship with somebody in a mastermind group, and they're like, hey, he told me that you had a deal. I'm like, okay, I'm looking for a deal, so let's talk about it. 15 minutes later, like, okay, sounds good. I'm gonna call the banker, and we're good to go. And so that's the thing where you get to that level, but you got to get your message out there, whether it's email, building up your email list, by, say, hey, this is a deal that we done last year. If you'll be interested when we get another one like this, hey, and just sharing that story, whether it's text messages to family and friends, social media is a great way where you can just update people on your projects that you're doing or potential projects that you're looking at doing in the future, and just sharing that. And then I encourage people to, if you're really serious about it, then put it on your calendar. Set time aside each day where you're growing, you're sharing something about your journey, and even if you don't even have a deal, just share with people what you're learning right now, or share that, if you're in a partnership with what your partner's doing. And just being able to continue to put information out there that's going to let them know when they think about real estate investing, they're going to think about you. I had a member from an old church that we used to go to that had a situation where they like, hey, a family member's house came up, they needed to sell fairly quickly because they had a reverse mortgage on it. And they were like, yeah, we probably need an investor. And he was like, boom. He said, as soon as my brother said that, he was like, I thought about you. And that's no marketing, no nothing. And so it goes the same way with getting deals, but also on the other side with investors as well too, whereas they see you as the expert in that field that can get them and can help them get wherever they need to be. Managing money and assets. I think, when you start talking about it, I kind of look at it as you got to have the information. You got to go through and you got to have integrity to kind of, I call it I squared, but then on the backside, you got to have the tactics. You got to know what to do, when to do it in the deal, and then you got to have the experience. So when it starts talking about managing money and asset, that you got to have that past experience, you got to have the deals. And it's okay if you don't have it up front, but when you start talking about partnerships and general partnerships and just building teams for like syndications, understand what you're strong at. What are you doing in your day job? What do you manage during the day for, projects, or, you deal with financials for the business at work, whatever it is that you don't have to have direct experience doing one thing, but look at other experiences that you've had in your career that directly translate to being successful in real estate. And then those things that you're not good at or you don't have experience, start looking for other individuals who are strong in those areas to partner. You partner for your weaknesses. And so that's the thing, whereas that you bring a team together, this team is, when you have a complete team, that's when you're going to be successful. You can't have everybody on the team being a quarterback. Somebody's got to block, somebody's got to run the ball, somebody has the quarterback, somebody has to run routes so their quarterback can throw the ball to them. And so all of those different pieces, everybody can't play the same position. And it's no different than real estate. Real estate is the ultimate team sport. Whereas that you're going to have a team coming together in order for you to be successful, whether it's the property management company, the investors, the general partners, the residents, you know, all these people, your contractors that's going to be working on the property, and everybody that's working for is like the compliance side with the government when you're working with them. So all that comes together, and then everybody else that's helping you, your accountant, your CPA. Well, I guess your CPA is your accountant, but and then your tax attorney and things like that all come together in order to manage these assets, to manage the money in order for you to be successful. And so that's one of the things that looking at with the team and partnerships, where is that you're able to cover your gaps or your weaknesses with other people's expertise. And that allows you to go a lot farther, a whole lot faster. And so that's one of the big pieces that comes with this, is just the opportunity to team and continue to grow. Whereas that, for me starting off, I thought that I had to do it all, and I did it all. And then eventually I started hiring virtual assistants to help me with cold calling, with reaching out, with managing my emails, because I was still working my day job. And we just over time, just kind of I built it up until the point where we were flipping 10 to 12 houses a year. We were buying rental properties, we bought an apartment building, and then we continued to grow to the point where is that, it got on autopilot. I left the city, kept the team in place. I hired an acquisition manager who was a realtor who could go on appointments, meet with homeowners. They could also list the property, and they could work with my contractor to be my eyes and ears during the day while I'm not there, and make it work. And then eventually, you can start doing that in multiple areas and scaling up over time. And of course, you guys go take more and more money in order to do multiple deals simultaneously, to bring on more investors, especially. And then when you start doing like apartments and larger deals, that you can start reaching further and further into your network and grow. But it all starts with the first deal. And with that first deal, like, creativity is just connecting things. That's all it is, creativity. And all these deals represent different projects and different ways that we raise the money, whether it's, having, a private investor on here, hard money over here. We had a fund over here on this one. We had seller financing. We had the credit union on the apartment deal. And, and so it's just having these different strategies. We wholesale this one, and we had one lender that allows the wholesale. Then we brought the credit union on to refinance, or we brought the credit union on to buy it out right up front. And so just different strategies to do deals. And then it's like the more and more you get these strategies in your toolbox, the more opportunities that you're going to have to, one, grow your portfolio, but at the same time, give investors a return on their money. Whether that investor is the bank, it's a private individual, that's a family member, or somebody from work, or somebody in a mastermind group that you're a partner of, somebody in your network that you're just able to be able to provide a return. And the better and better that you get at analyzing the deals and understanding that you can go in like, hey, I can raise this money, give them 8%, because I know I'm projecting that we're going to make 14% each year. And guess what? I'm conservative with it. So if we make 12, I still can pay my investors 8. Or if the first year we only make 6, you're like, hey, well, we're going to make 12 next year, and we'll pay everybody back that extra 2 that we didn't make the first year. And so those are all the details of the operating agreement and how it's structured, where you're able to take care of your investors throughout the deal and just the whole life of the deal. So what do we have in chat, Faye? Who was the closest? So 1.1 million. So that's for the total investor contributions, 1.1 million. And I just did that just to kind of I wanted y'all to get involved. But this is software that I use, but you don't have to use software up front. But that's where you can get to the level where you can raise, and some people raise multiple millions of dollars. For my projects, I focus on entry-level housing for first-time home buyers. Our entry costs aren't that high, and I primarily leverage private hard money. And my private equity fund that I work with Hornet Capital, that they're a great partner here since we started back in January last year, did our first deal with them. And so I don't have to raise a whole lot of money on the private side, but I do raise money for like the renovation side for some of our deals, the projects. I have individuals that come in that put money in the company for just a whole year, like, hey, for marketing or whatever, like I'm investing for a year, giving my 8% return or 10% return. And, and then we'll revisit it at the end of the term, in the end of the year, to invest. And so it's just things like that, where it's that you get to this point where you just kind of grow your business over time, and you're able to do more and more deals, and just as it grows with you. But I tell you guys, success It isn't convenient. There's never a great time to start. There's always going to be challenges. There's always going to be setbacks, but you have to continue to push through. You got to push through, because guess what? There's going to be setbacks whenever you go through life, period. And so I just encourage you guys that just start taking action. Just start having conversations, get out of your comfort zone. It's going to be, sometimes it's going to be uncomfortable, but just do it. Find a partner, accountability partner. Y'all practice, practice giving your pitch, your investor pitch, whereas that you're not just going in cold with somebody. When you got a call coming up and somebody said, they were interested in investing, practice. Don't go in cold, and understand, hey, this is, have a script that you can go through. And there's some things out there where you can go through that process, whereas you get more and more comfortable. And the more you have the conversation, and you can ask the right questions where you can get the information that you need and just better understand how you can help somebody. But there's never a right time to get started. Today it's always going to be something that comes up tomorrow that's going to prevent you from wanting to move forward. I like to just always, when I get off stage, I just like to share with people that, seldom in life can you be stretched to your full potential. You're going to have to be broken. You're going to have to go through some stuff to get to your stuff. That, understanding this and walking through with this principle has helped me to keep perspective on just so many things, with setbacks on projects, just setbacks in life in general, just, with losing loved ones and being able to kind of persevere, to be resilient, to be flexible in your approach on whatever's going on, where you can be able to still be able to see the projects through and be able to get through it. But I just encourage you guys to take action and get going. I know it's hard. A lot of times you got to try to figure out the time, the schedule, the kids' schedule, and everything in between, but figure out how you can move the needle on starting to build up that passive income, to start raising money. If you need to start raising money right now, you may need to just say, hey, maybe I need to start self-directing my own retirement account. I don't need to raise money. I just got to be a better steward of my money, where I can invest and get a better return on my own capital. And then looking at, okay, hey, if once I get good at it, I feel comfortable, it's like, hey, Bob, Joe, everybody, hey, come on, this is what we're doing. We're doing this deal. Let me know if you guys want to get into it. And so that's the thing. I did want to, before I got on the stage and open it up for questions, this is something that I've been teaching this, going through, kind of mixed in with my coaching and everything. And I'm kind of formalizing it over this last month. I've actually formalized it and put it out. And this is something that I'm going to be rolling out later this year. But I wanted to do this workshop, and I wanted to tee it up for those that are interested in raising money, to kind of go through with me leading the group as we go through and just explore in more detail. I couldn't go into a lot of the details with the strategies and how to build your list, how you can go and pull data from a certain zip code where you can understand all the cash buyers that were in this area, who funded their mortgages. And then also for like high net worth individuals that's funded deals, where you can get the information, where you can start mailing postcards, or you can target them on Facebook ads. You can, the local regions. There's a lot of strategies where you can find high net worth individuals, but then also the paperwork, the structure, the cadence, and how you go about raising the money and going through that process to where you're able to come in and, have a 15-minute conversation and raise $250,000. But it takes time to get there. But what I wanted to do, I wanted to open up for those that came out tonight to offer up. It won't be $97 for a whole long time. But that's something that I wanted to offer up. If you're interested to learn more about raising money, then take advantage of this. And it's going to be something that we're going to roll out over the next couple of weeks. It's going to be like a 4-week course. And I'm going to go through and lead you guys and teach you guys how I've been able to raise money, give you the promissory notes, the different the softwares if you want to choose to go through the syndications, but then also like the emails, newsletter templates, and all that stuff that I use in my business to raise money. Whereas that you're not starting from scratch, and you're kind of going through and you're making sure that you're doing it the right way. With that, Faye, we got any questions in chat? Anybody hand raised?
Joe earlier.
Okay, I couldn't see the clock on my laptop. 8:55. Perfect.
I think you answered my question, John. You said that you record the promissory note. I was just wondering if you actually have a deed, a deed of trust, or a deed, something like that.
Right.
Put them in a possession. I mean, My other question was, when you have lenders pledging to participate in your project, you wait till you get that project and have them hold on to their money until the end, or do you put down a fund, or what? How do you handle that?
Yep, you were coming in a little broken. So you were saying when you have the funds, when do you pay out?
No, when do you collect from the lender?
Oh, usually you want to do that a few days before closing. I would say at least 3 days before closing. You know, if you're doing like a large apartment deal or something, I would say even as far out as a week before. Whereas they're different people, because you may have somebody get cold feet at the last minute. The last thing you want to do is have to replace somebody and not have enough time to get across the finish line with closing on a big deal. But once you know, if you have like, you know, where you just got 1 or 2 investors, then, you know, a handful of days, you know, if you got trust with them, you know, they've done deals with you before, then, you know, they can wire directly to the closing table. That's what I've done with, like with the apartment. I had everybody just, hey, wire your money directly to the closing attorney, or, you know, they can wire directly to your account. One of the things that I do, I have a wire to one account, but then I move it to a separate account that's never had a checkbook, that's never been anything, just because, you know, the last thing you want to do is something happens, somebody hack into account or something, get your account number, and then you're having to deal with some type of issue like that. So usually I would recommend that you open up a separate checking account and then just have a checking account that doesn't have a checkbook, that doesn't have a debit card or anything, whereas that you can just move the money from your app or go in the bank and move it and just kind of keep that money secure there until you're ready to deploy it.
What if you have somebody pledging to be a lender, but you don't have a project for the next 30, 45 days? You just wait until you get to the closing to try and go back to that lender and say, are you ready now?
Yep, no, that's a great question. And so I think that's the thing, especially as you're building your list and you don't have a deal, especially like in a market like right now, whereas that you may not have a deal right now. Deals are maybe hard to come by, but you want to keep that constant communication. So a lot of people, you know, they'll have an email sequence that's going out. They're sending updated emails. They're sending a newsletter on other things that they're doing, you know, how they're managing their current deals that they have in their portfolio. Construction updates on like the renovations they got going on projects. You know, even like, hey, a new book or a new concept that they just learned, you know, just different things, just a reason that you can share with them some things that's real estate related on, that's painting you as the expert, that, hey, that you're doing deals, you know, you're gaining information, or, you know, even if you're just documenting, hey, you went to a networking event, you met XYZ, you're talking about this, or, you know, even like the areas that you're looking to underwrite. It was like, hey, Hyundai just added 2,000 new jobs to this area, you know, in Montgomery. You know, this is why I'm bullish on Montgomery, why I love the area. We just got these new jobs. They just approved this new development. Apple is building a headquarters here, and just sharing different things that's kind of related to real estate investing. That's directly. So you can talk about the market. You can talk about a new partner, or, you know, whatever it is, you know, you can put it into a newsletter or email, or even just a text message. You can do like a video, just giving a 1-minute video update, anything where it's that you stay top of mind. They understand that, hey, he's a real estate investor. He's getting smarter and smarter. He knows the market and different things like that, to where it's that now is presenting you as credible and as the expert. So now 45 days, when you come back with the deal, like, oh yeah, he just sent me an update 2 weeks ago on this, what's going on in the market, and yeah, I'm ready to go. Did that answer that for you, Joe?
Yes, Johnny, thank you.
No problem. Any other questions?
I do have one for you, Johnny. So what do you think
Sure.
would go first? Do you find a deal or you raise capital first?
Both. It depends. No, I think I think you want to be always raising money. Always. And I think you're doing that subliminally anyway. If you're posting, you're sharing information that, people are going, but you got to have those conversations and understanding, whether it's, talking with partners, talking with bankers, hard money lenders. You need to be talking with somebody and have pre-approvals or having commitments for a certain amount of money and everything where you're having those conversations. So when the deal comes, because a lot of times you don't have a lot of time to get there. So, a lot of times they say, oh, if you got a deal, then you don't worry about the money will find you. It's like, I don't want to be in that position where I'm just hoping and praying that, I'm going to be able to figure it all out in 30 days or less than that to get the deal closed. So you always want to be talking, having conversations with people and letting them know what you're doing. Whereas that now that when you do have the deal that you already kind of had those conversations. So you're not coming in cold, that you already had those conversations, they're warm. And it's like, okay, hey, I found that deal. Remember I asked you like, hey, if I found this, you said you were good. Are you still good? And I tell people one of the secrets with that when you're raising money, I always raise at least have 150% of what your raise is. So if you got to raise $1 million, raise 1.5. If you got to raise 100,000, raise 150,000. You want to go 50% above what you need because life happens, people commit, people change their mind, and the last thing you want to do is have all your eggs in one basket, and you kind of end up in a situation where you don't have enough money to close on a deal. And we've seen that. I think we had somebody in the workshop, a couple of weeks ago came back and said, that they lost earnest money in the deal. The deal didn't close. And, they lost a large amount of money. And so that's the last thing you want to do is not be in a position where you can raise all the capital.
You got Joseph.
What's up,
Hey,
Joseph?
Johnny, hey, how are y'all doing? How everybody doing? All right.
Good.
Great presentation, man. Thanks a lot. I did have a question. Do you know, have you ever used a DSCR loan?
I have not, but essentially a DSCR loan. So when you start talking about commercial, it's almost like it's a commercial loan, whereas that it's just based off the property's ability to pay the debt. So usually like for apartments, they want you to be at like 1.25. So and it's just the debt service coverage ratio. So they want the property to produce enough income to be whereas that it's producing 1.25 of what the debt service is. So if the property, if your monthly payment is going to be $1,000, they want the property to at least be producing $1,250. And so usually those loans that is based off the performance of the property. Okay. And but usually you're gonna pay a premium on the interest rate. The interest rate is gonna be a little bit higher than kind of traditional loan.
I just wanted to know if you had any personal experience in like qualifying for and are trying to use one.
No, I haven't used one of those personally. But a lot of times the underwriting should be a little bit easier. The DSC, but you pay the premium on the interest rate. Whereas that I tend to lean towards like credit unions for like the long-term loan products. We found really good success with that. And then and just for other things like with the bridge loan, which are like certain mortgage brokers that can reach out with different lenders they have in their network that can get the loans done. But no, it's definitely a place for it.
Would you say 2-bedroom? I guess it just kind of depends. Never mind. It just kind of depends. Thank you, Johnny.
Okay, no problem.
Hey, Johnny.
Hey, what's going on, Marcus?
Okay.
How you doing?
Doing good, man.
All right. Question: if you're a newbie and you're trying to raise money, what line do you use, or what do you use, a strategy you use to get people to trust you, or to get the capital, raise the capital?
I think just being able to tell your story on on delivering, whether it's through the projects that you've done and closed, and and just showing the experience that when you lean back on your resume, I think is the big thing, your resume or your receipts. And I think that's the piece that people, and I think that's one of the, a lot of people, they start with family and friends because those people already, they trust you. They know you, like, man, get out of here. I ain't about to give you my money. I see what you be doing out in the gambling house. So they know you. They know where you coming from. Not to say, not saying you in that example, but I'm just saying, in general, they know your history, they know your body of work. And so, like, with family and friends, if you're serious about it, they were like, nah, man, they know you've been doing this for a few years. And so that's where it's usually a lot easier to start there. And I think that's where the social media side, that's where just other people can see the body of evidence and the proof on what you've been doing and been able to do. And I think with just sharing your deals or newsletter and just getting that information out over time, and then just that body of work just kind of builds up over time. And so that's why I say, like, with the hard money lenders and some of those, that you can start there because they is a little bit more objective. It's based off the numbers, underwriting, like, okay, it's a deal, it's appraisal, we'll lend on. You got a great price and we know it's going to be worth this amount when you finish. We're like, okay, it's a deal for us and we'll do it. We'll fund you, give you the money, versus on the individual side, that it is more I'll say emotional decision. It could be subjective to that person's, going back and forth. It's a lot more, because a lot of times that it don't even come down to the numbers, that they an individual may not even be familiar with the numbers to that point, but it's just they like you, they trust you, you got the story, and you cast the vision on what you're doing with it and why it's a deal, and why you think that it's going to be successful.
Okay, I appreciate it.
Yep, no, great question. Anybody else?
Can you tell us a little bit about the raising private capital seminar, webinar, learning series? I mean, would that be one time, or that's just tell me something about it?
Yeah. So you'll see something here about it here in the next week, Joel. You're good.
Well, I just saw the deadline for early registration was like this week, Saturday night, I think.
Yeah. That's for those that want to sign up. But all my coaching clients, you guys grandfathered in. You're already good.
Oh,
yeah,
okay.
that's more so for people who just came into the community with REI Genius to give them an opportunity to kind of come in and to learn about it and go from there. But no, you guys are with where we are right now, the 16-week accelerator, for sure. And this is something that that I want to show and kind of pour into you all, whereas that you can kind of take this as well too. So no, that's a no-brainer. Good question. Anybody else? I think, is that it, Faye? I don't see anything else in chat.
I think I do. I think I saw. Oh, where did he go? Joseph? I think I saw Joseph raise his hand.
No, he already answered
No?
my question, Faye. Thank you.
Okay. All right. Well, I just wanted to quickly mention in regards to Marcus' question earlier in terms of what was that? Where to get started. People would, of course, you would want, it's easier if people already knows you. So start with your power base. And a lot of this that we cover with the raising capital part is, a lot of this has something to do with your, we don't want to be technical, but it's known for the marketing piece of it. Like we're not marketing what you guys have or the deals that you have, but we'll have to start marketing you as the jockey versus the horse, right? And we'll be incorporating that in the course of the one that we have posted in the chat box, in terms of how are we going to drive people with the KLTV. That's the term. It's know, like, trust, and value you as the jockey for, towards helping them reach their goals. And this is not just for you. As Johnny mentioned earlier, the taking versus asking is you're not begging for money. You're actually giving them opportunities to be able to build wealth alongside with your experience, and how we're going to talk about how you're going to be positioning yourself in terms of the approach and your value proposition in the market to be able to achieve that KLTV, not just with the power base, but well, truth be told, sometimes it's easier to have people like you and trust you, or strangers like you and trust you faster than the people who already have known you. I mean, it's case by case, of course, but
Oh, facts.
for some of us, I would, put myself in that position. I mean, in that I'm part of those, category that not everyone in our circle understands what we're doing. Like, real estate is not something that it's not not an interest to them, and also like a jargon or far too off, way over their head. So yeah, sometimes it helps as well that we share what we're learning. We don't have to be an expert field. We just need to share who we are, and yeah, what we do and how we're learning it. It matters. So yeah, we look forward to seeing you there. I think we only have 48 hours for it.
Yeah.
For those that are in the
Yeah, for everybody that's not in my coaching program, for sure. Yeah, go
Mhm.
ahead, sign up, and we'll bring them in so they can come through the journey. And yeah, as we unveil this, I'm excited because just over the last year with everything I've been doing with coaching, and just the more and more people I talk to, that money is the number one roadblock to people getting started, to kind of getting deals, and just that whole limiting belief on, hey, I can't be a real estate investor because I don't have money. And I thought the same thing too, until it's like, okay, wow, like these people coming in deals and they ain't got no money. They just got the deal, but they know how to present the deal. They know how to market themselves. And they know how to market the deal in order to bring in investors to back them. And they just manage it, and they get a share of the equity, and a piece of the deal, a management fee each month, and do that a couple of times. And next thing you know, you're building up some wealth in your portfolio.
I think we have a question from Reg.
Okay, what's going on, man?
What's up, man? Hey, I really just wanted to say this for everybody that's out there that's listening, because I seen it firsthand from you, how you was able oh man, to raise what, about 300K in about 15 minutes. I ain't never seen nobody. I mean, you think you probably at an auction the way how fast that thing went. But I will say this, just from my experience of seeing Johnny, and even with Johnny being my first partner on a fix and flip and funding my deal with no money. Just coming with a deal, coming with numbers, coming with an extra strategy to where people be confident, getting the education, and with the execution. And that's pretty much it. And a lot of people that I'm figuring out now, talking to different people, they want to put their money in something. They understand that their 401k is down. They understand that their stocks are down, and they want to get into real estate, but they just don't have the time to manage it. So they want somebody like you. So my suggestion is start telling people you're a real estate investor. Get really educated, fine tune on your skill like anything else, like riding a bike, like really learn that thing to a T. I'm still learning now, even on the underwriting space on apartments, because when I present the next deal, I want people to be confident in what I'm presenting, and they want to lend with me. And we all, and a lot of accredited investors and people like that, like they know that real estate is going to beat inflation. Cash flow is going to beat inflation. It's going to always beat the stock market. You're going to get greater returns on your money. Even with promissory notes, you're talking about 10 to 12% interest on their money with a project that they're a part of. I mean, there's so many different ways that people understand, but the biggest thing is just getting education, finding the deal, putting together a great presentation so someone can actually see the vision and want to be along that journey. So just want to throw that out there for everyone that's, you know, don't have the money and want to raise that capital.
Mhm.
No, 100%, man. No, thanks for sharing that.
Mm.
All right, cool. I think that's it, everybody. I appreciate y'all coming out. Hopefully some good information, and be on the lookout for the Raising Private Money course. We're gonna put this together. I'm excited about that. And I think this will be a great supplement to everything with the 16-week and rolling that piece out. And then I think probably April, May, the small multifamily investing, that piece is coming out.
Yeah.
So
And I would also like to give a shout out to Sassy. I'm putting her on the spot right now. Congratulations on your, I think that was your submitting her first purchase and sales agreement.
Yes, I actually got it. It got accepted. It got signed. So today, this seller was a doozy. Good Lord. But yeah, got it done. So now moving forward. So yeah, that's why I've been MIA. I'm learning to, and this is something that Mitch is teaching, that you have to really celebrate those small
100%.
and you know, things in the journey. And I am not good with that. I am a person, I'll put my head down and I just won't say anything to anybody, and I'll just hustle and I'll just do stuff and don't say nothing to nobody. And I got to get better at celebrating, you know, those little things. So yeah, Mitch is helping me with that. It's not easy for me because yeah, I'm definitely, thank you everybody.
Yes, it is. Yes, it is. It's easy. I want you to say it's easy.
Okay.
It's easy.
We're here.
All
We're
right.
gonna back you up.
Yeah.
And congrats, Sassy. Yeah,
Drop
there's
that.
a
Yeah,
lot.
drop that. It's not
Yeah.
drop that from your vocabulary. It's easy. You can make it easy.
Okay. I got it. Well, can I say I got to get better at it?
We all got to get better.
You got
Oh.
an army here.
You got
Yeah.
this. That's super awesome.
Thank you. Thank you guys. I appreciate it. Everybody who said congratulations. Thank you so much. So hopefully I can go to close. I'll keep you posted on this.
Nope.
Oh,
Oh, we're going to close.
We didn't know hope.
We're going to close.
We're going to close. Let's
Thank
go.
you.
Let's go. We going.
Thank you.
But no, that's awesome.
Awesome.
That's phenomenal. Let's go. Hey, keep making equity happen. That's what we do. Keep doing deals, putting offers in. Hey, that's the motto. Make offers, not excuses.
Well, I will say this too then, since y'all then pumped me up to talk about my little journey and what I'm doing. So Saturday, I have an investor that I'm talking to who has 8 properties that he's looking to sell. And he wants to do seller financing. He's 81 years old. He wants to do seller financing because he doesn't want to get hit with capital gains tax. So that'll be 8 properties right there. Yeah.
Boom, just like that. I'm telling you, you
On
one
a
phone
roll.
call, one text message away from your breakthrough.
Mm-hmm. That's facts. That's facts.
Telling y'all, you just gotta be faithful to the process. No, that's awesome. You got it. You got it. Go walk into there with confidence. You already know what his pain point is. He don't want to pay taxes. He's already somewhat agreed to seller financing. Go in with your terms and say, hey, what do you think about if I paid you X amount this a month? Sit down, do your analysis, and come in with like, hey, if I can rent each one of these for this amount, market rent, you know, I'm assuming if we have to put X amount in for his renovations, I can pay you X amount a month.
Right.
How does that sound, Mr. Seller?
Mm-hmm.
And you know, and make it work. And I know you can do it. The biggest thing is when you're having those conversations with sellers is be confident.
Mm-hmm.
Be confident, be confident. Do whatever you gotta do, pump yourself up, do whatever you gotta do before you get on that phone call, and you know, and do your affirmations, you know, and go in with confidence, knowing that I'm gonna close this deal. I'm meeting everything that he needs to do. And I'm a true believer the Lord is gonna set that path before you and prepare that table before you.
Absolutely, Johnny. It's been a journey. It's been a journey. I'm in a process now. At some point, I'm going to probably park my license as a realtor because I really believe that I'm not going to need it. So my broker has been like pushing for me to get listings. The reality is I don't like dealing with homeowners. Like that is not my niche, right? I like talking to investors. That's what I love doing. And so I don't have to get rid of it. I'm actually working now to do some expireds, but they're all multifamily commercial deals that expired. That was on the MLS because Bright MLS actually posts residential and commercial
Nice.
properties. So I said, you know what? I'm not going to stress myself out. I'm just going to focus on what I love the most, and that's dealing with investors. And that's where my passion is. And you know, they're not going to care as long as I get listings. What difference does it make? For me, it's going to help me with Joseph said, can I change brokers? I absolutely can, but I just joined this brokerage. I used to be with EXP and I just joined this brokerage with Weicker. They're not a bad brokerage. I just don't think that as a realtor, you have to subscribe to the way other realtors do things. Like I'm not a fan of scripts. I just talk to people. That's it. Just hope, because no script can prepare you. I've had conversations with investors that there are no scripts out there that could have ever prepared me. I mean, I've had investors sit on the phone and tell me the whole life story and start crying on the phone with me. No script could ever prepare you for that. So I'm not a fan of scripts. I'm sure that's like me breaking the golden rule by saying that, because a lot of people swear by them. But this brokerage are like, yeah, you want to go in with this book and go through these pages. Nobody got time for all that. Listen, Mr. or Mrs. Seller, do you want to sell? Okay, great. Well, let's talk. Like, you know what I mean? Like, I just don't want to, and I haven't said that to them. Yes, I will lose access to the MLS if I give up my license. If I won't give it up, but you could park it so that you're not necessarily with a brokerage. But I will lose access to the MLS because in order for you to have access to the MLS, you have to be with a broker or with a brokerage. So I don't need it though. So at some point, I'm not going to need it because I'm already building my connections with investors by connecting with other investors. I really don't care about when you say referral status, Joseph. What do you mean? Like somebody referring business to me? I don't need, well.
So I think it's termed differently in different areas in different states, but referral status is like so your license wouldn't be with a broker. But you still can get, well, no, it would be with a broker, but the broker is not going to expect you to do any business. So it'll just be, hey, let's say a realtor, you knew someone who was selling a home. You can refer them to a realtor, then you get paid a referral status, but you still have access to the MLS and everything.
Not exactly. So in Pennsylvania, I don't think I would be able to do that because in the state of Pennsylvania, RESPA laws state that, for example, like you're not a realtor. Like, let's just say you referred a property or a client to me. I wouldn't be able to pay you a referral fee. That goes against the laws in Pennsylvania. So if I park my license, I won't have access to the MLS. I think Joel, you mentioned about expired listings. I mean, you could pull expired listings from PropStream. And a lot of times it's really about data, and you could just connect with another realtor and say, hey, listen, give me access to your Bright MLS. I pay you a certain amount of money every month. Or you give me access to your expired listings. And if it's something that won't work, I'll pass it along to you so you could take that and go from there. Or if I do the deal, I cut you some money to, because I did this deal because of you. So you really don't need, a lot of people think you need the MLS. You really don't. It's not necessarily necessary because you can connect with somebody. Like I used to do commercial for EXP. I have broker colleagues that have access to Reonomy. I was just doing a Zoom call with him yesterday, and he gave me a list of properties for Alabama. So I don't have Reonomy. Why pay all that money every month for what? Just tap into your network. That's it.
100%. Yeah, my realtor, if I give her leads that we can't close on and she can get a listing, then she just pays me 25% marketing fee
See?
of her commission.
Hey, Sassy, I had a question for you.
Yes, Reggie.
Yeah. So, you know, I've talked to you on several different occasions, right? And
Mhm.
for the new people that are in that may not know you, you know, we've talked on several different occasions. What is the one thing you would say to a newbie out there that they should do in order to get their first deal like you just did under contract? What's the one thing you say that you glad you did?
You got to do it afraid. And one of the things I will say, you have to change your terminology. So thank you, Johnny, because I used to say I hate cold calling. I hate cold calling. I had to change my speech. So I don't say that anymore. Now I say I want to help tired landlords. I want to help landlords. It's a different dynamic when you shift it that way. So change the words that you speak. You just got to do it afraid. The only way you get past fear is action. That's it. You just got to try it. And the reality is you're not going to do, and you know what? You may not do everything right. Nobody ever does, but you might not be as bad as you think you might be at it. Because you hear some people say, well, I'm probably not good at talking to a seller. You might be much better at it than you think. And I don't think it has anything to do, especially if you're a conversationalist, because when you talk to these investors, they love talking. So you really don't have to say much. All you got to do is just be quiet and just let them talk. That's it. That's it. Especially if they're older. Because this one old man, he done told me about his brother passing away and his son don't want to be bothered with real estate investing. His grandson don't do a good job. He told me all of this just in talking to him. And he has 8 properties that he wants to get rid of. So, because he said he's 81 and he's getting older and he does all the work himself. So you really gotta put yourself out there. But I want to say too, I'm new, but I'm not new because I've actually been doing this now since 2019. So for a lot of people who are thinking that, I think this is important to note that some people that you see that are, doing stuff, it's like an iceberg effect. You see the success or the little bit of success up top, but you don't see all the other hours that they put in, the many times that they called and got told no, got hung up on. So this is why you should never, never, never envy somebody in their success, because they had to go through some stuff. Everybody has a process and a journey. So I'm just learning. And that's another thing. I'm learning to really enjoy this journey and this process. I hated it before, but not anymore. I have really learned to love it and just take it one step at a time. I hope that answered the question, Reggie. I don't know.
Yeah, no, I'm listen, I'm gonna step in because you're being real humble right now. Let me tell you something. Everything she said was 100% right, but she's been totally consistent. She called me talking about the LLC, what state she was gonna do it in, how she was gonna set it up. She got that done. She was calling me, telling me her strategy, that she was gonna go after the tired landlords and cold call and go with the creative financing way. She honed in on her goals and she chose a strategy and she executed. That's what I want everybody to know. For all the people that's on here, whether you've been on here for a couple of months or you're brand new, you got to be consistent. Can't worry about the small little things. You got to execute. You can't be on here talking about you're a real estate investor. You show up every week on these calls, you ain't did nothing. And I know I'm kind of giving some tough love out there to everybody, but I'm just being real, y'all. Like this thing can happen for you, but once you set your goals, you got to understand your strategy and you got to shoot for it and actually execute. Okay. Because as this market changing and as these buyers start coming back in and these hedge fund companies start coming back in and buying up everything, you're going to be left in the dust.
Reggie, you don't, what did we talk about, Reggie?
I know. But I'm just blowing the trumpet for you, man, because I just remember you was on the phone. You was on the phone with me at least once or twice a week, man, telling me what you was gonna do in your strategies, and you was like, "All right, I ain't doing no more talking. I'm finna do it." And now I'm so proud of you to hear that you got your person on the contract. That's what I'm talking about.
I appreciate it. Thank you so much. I'm humble. I don't like to. I don't Okay, Johnny told me not to say that. I do like I'm humble. I'm just gonna say that.
Hey, ain't nothing wrong with that. Hey. Yeah, no, take your flowers. No, you earned it.
Thank you. I appreciate it because it's been a long time coming, and this is just the tip of the iceberg. So I know there's way more where this is coming from. I'm about to start doing the same thing for Alabama, so I can get one of those properties under contract in Alabama. You know, like the mom and pop investors, and I'm about to, you know, make my phone calls or send out my mailers for them. And yeah.
Okay. Let's
Go
go.
girl.
Thank you guys. I appreciate the love and I do appreciate it. So I'm sorry I've been MIA, and that's why. So
Hey, you know where we are when you need us.
I know, but still, I was like, man, I haven't been on any of the Zoom meetings with Johnny and them. I was like, man, but I
You've
gotta
been
get this
working.
done.
You've been working.
Yeah, I have been.
That's awesome. Any more testimonies before we close out tonight? Oh, that's awesome. Y'all got me happy. So I'm talking about how to end the week.
Yes. That's it. Yeah, I mean, I couldn't speak for I'm just really so proud of Kathy. Like a couple of years ago when we first talked, we like spoke on the phone for an hour or two.
Mhm.
That's exact. Yeah, and we were just talking about it. Like, I mean, it's time flies, and it's just amazing. It's
Yep.
amazing. I mean, I'm losing for. I can't get the right words, but I'm so proud of you, Kathy.
Thank you, Faye. And yeah, because I remember us talking, and I just want to say that there were a lot of things that I tried that didn't work out. So I don't want to miss that, because I think I would be doing anybody a disservice if I didn't mention that. There were a lot of things that I tried, things that I had planned for that I thought was going to go a certain way, and it didn't go a certain way. And the reality is, you just can't quit. Even if you just got to walk away for just a hot second and get yourself together, you just can't quit. You just got to keep going, because eventually you're going to land. You're going to win either way. That's the way I look at it. So, yeah.
It's powerful.
Outstanding. All right, cool. Well, this has been awesome. Y'all have a great evening, have a great weekend, and yeah, make some equity happen. Keep taking action, and good things will happen. And
All right. Good night, everybody.
y'all have a good
Thank
one.
you so much, everyone. Yep, we'll see you again next week. Have a great one. Thanks, guys.